As we move into 2025, tariffs continue to shape global trade dynamics, creating both risks and opportunities for investors. Government-imposed tariffs on imported goods can drive up costs for certain industries while providing a competitive advantage to domestic companies. Smart investors can leverage these market shifts by identifying stocks poised to benefit from trade restrictions and increased domestic demand. This guide explores the best stocks to invest in during 2025 that could gain from tariff policies, analysing key industries, individual stock recommendations, and financial considerations. Industries benefiting from tariffs in 25. 1. Industrial automation and onshoring beneficiaries. With continued efforts to reduce reliance on foreign manufacturing, companies investing in automation and reshoring production stand to gain. Increased domestic manufacturing means higher demand for automation technologies, construction, and factory equipment. Top stocks to watch. 1. Rockwell Automation, NYSE ROC. A leader in industrial automation, Rockwell Automation continues to see rising demand for its manufacturing efficiency solutions as reshoring accelerates in 2025. 2. Caterpillar Inc., NYSE CAT. The ongoing trend of domestic infrastructure development benefits Caterpillar, a leading producer of heavy machinery. 3. Siemens AG, OTC CG. A key player in industrial automation and smart manufacturing solutions, Siemens stands to gain as businesses look to modernize operations. 2. Steel and specialty materials. Tariffs on foreign steel and aluminum continue to bolster domestic steel producers, making US-based suppliers more competitive. Top stocks to watch. 1. Nucor Corporation, NYSE NUE. As one of the largest steel producers in the US, Nucor benefits from protective tariffs that limit cheap imports. 2. Cleveland-Cliffs Inc., NYSE CLF. A major supplier of steel to the automotive and construction industries, Cleveland-Cliffs sees increased demand from domestic manufacturers. 3. Carpenter Technology, NYSE CRS. A specialty materials provider poised to gain from industries seeking high-performance materials without relying on imports. 3. Defense and aerospace. Geopolitical tensions and trade restrictions on foreign defense contractors provide an advantage to US defense and aerospace firms. Top stocks to watch. 1. Lockheed Martin, NYSE LMT. One of the top beneficiaries of US defense spending, with strong government contracts and limited foreign competition. 2. Boeing, NYSE BA. Despite past challenges, Boeing remains a dominant force in the aerospace sector, benefiting from restricted competition. 3. Raytheon Technologies, NYSE RTX. A key supplier of defense and aerospace technology, Raytheon continues to grow amid national security concerns. 4. US agricultural and food producers. With tariffs affecting food imports, US-based agricultural and food processing companies see increased demand for domestic supply chains. Top stocks to watch. 1. Archer Daniels Midland, NYSE ADM. As global food supply chains shift, ADM benefits from increased domestic agricultural production. 2. Tyson Foods, NYSE TSN. With restrictions on imported meats, Tyson sees continued demand for its poultry, beef, and pork products. 3. Bunge Limited, NYSE BG. A global leader in agribusiness, benefiting from strong demand for US-grown crops and food commodities. 5. US energy and infrastructure. Energy tariffs, particularly those affecting imported oil and renewable energy components, can create opportunities for domestic energy companies. Top stocks to watch. 1. ExxonMobil, NYSE XOM. As the US limits oil imports, ExxonMobil benefits from increased domestic production and higher energy prices. 2. Next Era Energy, NYSE NEE. A leader in clean energy, Next Era gains from tariffs on imported solar panels and wind turbine components. 3. First Solar, NASDAQ FSLR. As tariffs push up costs for foreign-made solar panels, First Solar's US-produced panels become more competitive. 6. Financial institutions and banks that finance industrial growth and manufacturing expansions can experience increased activity due to tariff-driven demand shifts. Top stocks to watch. 1. JP Morgan Chase, NYSE, JPM. As domestic industries expand, JP Morgan benefits from higher capital investments and loan demand. 2. Goldman Sachs, NYSE, GS. With expertise in industrial finance and trade advisory services, Goldman Sachs is well positioned to capitalize on tariff-related restructuring. 3. Bank of America, NYSE, BAC. As US companies shift supply chains, Bank of America stands to benefit from increased lending and investment banking activity. Industries and stocks. Protected from tariff threats. While some industries gain from tariffs, others operate with minimal exposure to trade policies, making them safe investments against tariff volatility. 1. Technology and software. Since software and cloud computing services do not rely heavily on imported goods, they are largely insulated from tariff disruptions. Top stocks to watch. 1. Microsoft, NASDAQ, MSFT. A leader in cloud computing and enterprise software with minimal impact from tariffs. 2. Alphabet, NASDAQ, Google. Parent company of Google, with strong revenue from advertising and AI-driven services. 3. Adobe, NASDAQ, ADB. A top provider of creative and marketing software, unaffected by trade restrictions. 2. Healthcare and pharmaceuticals. The healthcare industry remains largely protected from tariffs, as demand for medical services and pharmaceuticals remains stable regardless of trade policy changes. Top stocks to watch. 1. Johnson & Johnson, NYSE, J&J. A diversified healthcare giant with strong pharmaceutical and medical device businesses. 2. Pfizer, NYSE, PFE. A leader in pharmaceuticals with steady revenue streams from vaccine and drug sales. 3. United Health Group, NYSE, UNH. A major player in health insurance and medical services, unaffected by tariffs. 3. Consumer staples, companies producing essential household goods and beverages, maintain steady demand and are less impacted by tariffs. Top stocks to watch. 1. Procter & Gamble, NYSE PG. A leader in consumer goods with a strong global brand portfolio. 2. Coca-Cola, NYSE KO. A dominant beverage company with stable demand. 3. PepsiCo, NASDAQ, PEP. A diversified food and beverage giant, resilient to trade fluctuations. Investment considerations and risks potential. Upside in 2025. 1. Domestic manufacturing boom. Companies investing in US-based production gain a competitive edge. 2. Government support. Increased spending on defense, infrastructure, and energy benefits domestic companies. 3. Reduced foreign competition. Tariffs protect US businesses from cheap imports, leading to higher margins and revenue growth. Risks to consider. 1. Retaliatory tariffs. Foreign countries may impose countermeasures that could impact US exports. 2. Policy uncertainty. Changes in trade agreements or government leadership could shift tariff policies. 3. Inflation and costs. Higher costs for raw materials and labor may affect profit margins despite tariff protections. Conclusion. Are tariff-driven stocks a buy in 2025? By strategically selecting stocks that benefit from tariffs while balancing investments in industries shielded from trade risks, investors can navigate the complexities of 2025's market landscape. Keeping a diversified portfolio with exposure to domestic growth industries and resilient sectors ensures stability amid changing trade policies.